Consider these defensive stocks during a market downturn. Aggressive Federal Reserve interest rate hikes, economic stress from the conflict in Ukraine, and persistently elevated inflation have investors concerned a U.S. recession may be imminent. When the U.S. economy tanks, even the most high-quality stocks get dragged down with it. However, during the past two U.S. recessions in 2008 and 2020, there were still a handful of stocks that significantly outperformed the S&P 500. These recession-resistant stocks might help you play defense in the 2022 bear market as well. Here are stocks that CFRA Research analysts recommend that outperformed the S&P 500 in both 2008 and 2020. Our goal is finding out best stocks for you. Subscribe for more videos like this. Walmart Inc. It's no surprise that discount retailer Walmart outperformed during each of the past two recession years. Americans can't go without groceries when times get tough, but they can save money by bargain hunting at Walmart. Analyst Arun Sundaram says Walmart has been struggling with excess inventory and cost inflation in recent quarters, but the company's evolving business model, including initiatives in e-commerce, technology and automation, make it an excellent long-term investment. He projects stronger and more consistent earnings growth for Walmart in coming years. CFRA has a buy rating and $150 price target for WMT stock, which closed at $140.73 on October 27. S&P 500 outperformance, 5.1% 2020, 56.3% 2008. Abbott Laboratories ABT. Abbott Laboratories is a diversified healthcare products company. It's understandable why many healthcare stocks outperformed during the pandemic in 2020, but Abbott shares actually outperformed by an even wider margin in 2008. Analyst Paige Meyer says Abbott stock will outperform peers over the long term thanks to its growing market share, strong balance sheet and track record of dividend hikes. Meyer says Abbott's diversified portfolio of innovative products will help the company overcome falling COVID-19 testing demand and continue to generate impressive revenue growth. CFRA has a buy rating and $123 price target for ABT stock, which closed at $96.93 on October 27. S&P 500 outperformance, 9.8% 2020, 33.6% 2008. One of the first ways the Federal Reserve typically reacts to a recession is to cut interest rates. Low mortgage rates coupled with a lack of entertainment and leisure activities during social distancing triggered a boom in the housing and home improvement markets in 2020. Analyst Kenneth Leon says a U.S. housing shortage has benefited Home Depot and triggered a surge in home remodeling projects as families opt to stay put amid a scarcity of attractively priced homes. Leon says supply chain disruptions remain a risk, but Home Depot is generating positive sales growth in all of its product departments. CFRA has a buy rating and $365 price target for HD stock, which closed at $291.06 on October 27. S&P 500 outperformance, 5.3% 2020, 23.9% 2008. Synopsys Inc. SNPS. Synopsys provides a platform on which engineers can design and test semiconductor chips and other software applications. The global semiconductor industry is likely a secular growth market, so demand for chip testing and design services is constant even during an economic downturn. Analyst John Freeman says Synopsys has improving fundamentals and an attractive valuation. He says Synopsys has significant pricing power in its electronic design automation business and is a beneficiary of increasing semiconductor design complexity. Freeman projects 18% annual revenue growth over the next 3 years. CFRA has a strong buy rating and $514 price target for SNPS stock, which closed at $289.19 on October 27. S&P 500 outperformance, 70% 2020, 9.9% 2008. Accenture plc. Accenture is a global information technology services firm. The company generates nearly half its revenue from North America, about a third from Europe, and the remainder from other parts of the world. Accenture's diversified consulting and services business made it recession-resistant in the past and will likely continue to do so in the future. Analyst David Holt says Accenture has a resilient client base, a solid balance sheet, and a long-term track record of above-average earnings growth, all of which makes it an excellent defensive investment. CFRA has a buy rating and $333 price target for ACN stock, which closed at $278.84 on October 27. 500 outperformance, 7.8% 2020, 29.5% 2008.